Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so we're just gonna hop right into the charts. Again, quick reminder on the news. It's really March 22nd that's gonna have the big news, which is the FOMC day. So March 22nd, this Wednesday, you wanna be on the lookout for the news that's rolling in. We do have other big important pieces of news throughout the week, but March 22nd is the main day. Okay, so this Wednesday. Now, hopping into the charts, let's start with Dixie like always. So Dixie today had that continuation lower as expected, so we have been looking for it to break down further after making this slight high pivot coming into the bearish monthly fair value gap. Now we're looking for it to come on into the daily bullish fair value gap, so I am looking for slightly more downside. Now we have gone long enough where we could see some slight upside prior to another drop, so we may not just get a continuation going to the next daily candle. We may see a slight little slowdown in the selling. We have had some pretty strong down candles for the dollar, but the structure overall is telling us look for it to get into the daily bullish fair value gap, potentially come into this ascending trend line, and then we can start looking for potential a low pivot down around this zone here, around this trend line, and then another move to the upside. Now, will it completely follow this doodle? We don't know, but this is the most probabilistic path that I've seen. So this is what's most likely, but we don't know if it's going to create a more bearish structure or a more bullish structure. So we'll have to kind of let the price action mature, let the pieces come together to give us the full picture. But as of right now, it has been following the general idea of what we've been mapping out over these last recaps. Okay, so look for more downside on the dollar coming into the daily bullish fair value gap, and then I would start to look for signs of a push up. Next is the Dow. So let's pull up the Dow. Very interesting day in the markets. Again, we're not going to have too much change in the structures, I think, until the FOMC starts to really hit. There's going to be a lot of uncertainty, and that's what we're kind of seeing, right? We're seeing the continuation of the battle of this fight between bulls and bears, right? So if you followed the last recap, I had said, look at the price action here. They're going tit for tat, right? So you have the bulls have a strong day, bears have a strong day. Bulls have a strong day, bears have a strong day. Bulls had a strong day, and I would not be surprised if bears actually have a strong day going into tomorrow. And this is happening a lot because, no one really knows what's coming forward. The FOMC can go either way. Are we going to raise rates again, 0.25? Are we going to, for whatever reason, go 0.5? That's very unlikely. Or are we going to do something that's been on people's minds, and it's been little rumors coming in and out that maybe the Fed won't raise rates at all and they'll pause. So, there's really a lot of uncertainty. So this behavior is indicative of that. So as we can see from the Dow, it's been fighting here, tapping further into these fair value gaps again. So it's been coming into here, wicking out, and then just holding right above. So once Wednesday rolls around, we're gonna get some sort of decisive action out of this zone, okay? Whether it's to the upside or downside. Now, if they do decide to not raise rates, if they say, hey, we're gonna pause raising rates, I do think you're gonna see upside, okay? You are probably gonna see some upside, at least in the short term, going back towards, potentially all the way back towards the 33,000, okay? It could get very violent. Whether it sustains up there is a different story, but we could see an initial spike up. Now, let's say they do raise rates, and then they say, hey, we're not going to raise rates going forward, we're going to pause. I do think you're going to get something that's more of a steady rise from there, because you're going to get the markets to price in pretty much no more hikes going forward. Okay, so if they do, let's say 0.25 raise, and then Powell kind of insinuates or flat out says, hey, we're going to kind of pause raising rates for the foreseeable future until this banking issues get under control, then you'll probably see some upside, probably a lot less impulsive if they just decide not to raise rates at all, but you'll get a reevaluation, a repricing of the assets based off of that behavior. And then if for whatever reason, if they somehow say the word easing, then you probably see an absolute skyrocketing in equities and a lot of different high risk on assets. Okay, again, we don't know what's going to happen, but the most probable path forward is that they do raise 0.25, and in the talks Powell may insinuate that, maybe we're not going to raise rates going forward, at least for maybe the next quarter or so. Okay, so they'll try and hold the information close to their chest. They won't try and be too too determined on giving you the full path. They're gonna be very, very tight-lipped. But I do think they are gonna probably insinuate a pause of some sort, getting closer and closer to that final Fed pivot. Okay, but overall, we are kind of playing out as expected. I had this level circled for a reason, just because it is the fair value gaps and also the descending trend line structure. Though it came back to test the structure pretty much. It broke bullish, and it coming back to test. This is all basic textbook stuff, right? You have a breakout, you come back and test the structure as support, and if it holds, you have continuation to the upside. So that's currently what's happening here, and so far it's been holding. We'll see if we have that continue on forward. Okay, now let's go on to SPX. So look at the S&P. So S&P continuation up again, doing something very similar to the Dow. Now it's not as sideways in the action, but as you can see, it's very slow going, even though the candles are very decisive. So what I mean is there's not really much opposite direction going on here, right? So you have upside, slight downside, tapping into the descending trend line, then clear upside, and then clear downside, clear upside, and we're probably going to get clear downside until Wednesday. So we're getting the same behavior. It's just a slightly different structure than the Dow, but overall, same indecisiveness, holding the structure. It broke bullish just like the Dow. So again, if we have what we have going on Wednesday, where they don't raise rates, look for explosion higher, and then it's pretty much the same scenario I described with the Dow. So overall, everything's kind of holding steady. NASDAQ is slightly different. So as you can see, has been relatively strong compared to the two. This was in a much more bullish structure compared to both the Dow and the S&P. It actually had that break bullish. Okay, so it had that break bullish. Now, will it have continuation? It's unlikely. The reason why is because of what's going on, the indecisiveness. It had its move up, and it's probably going to trade sideways around here until that is made clear of what's going to happen with the Fed. Okay, so don't look for any more upside prior to Wednesday, in my opinion. I do think we're just going to continue to consolidate here, and then whatever information comes out from the Fed will decide whether this is going to be like a double top kind of structure, an Adam and an Eve top here. Okay, so we make it that Adam and Eve top here, or if this is going to be a continuation of the bull flag that was here, and look for that continuation higher and not have a double top structure, just have a trend to the upside. Okay, so this is undetermined right now. Obviously, it's begun to break out structure of this bull flag structure. It's begun to break out, but we don't know if it's going to actually have the legs. So we're going to have to wait until Wednesday probably to get that made clear to us. Overall, if it breaks up higher, I'm looking towards obviously the top of the green zone, but really going back towards like 13.5, 13.2. So around this bearish fair value gap zone, and this is a big zone here. It's very likely we will start to fail around here and then pull back into the green zone, trying to hold it pretty much. So doing something similar to this, that pulling back, and then looking to see if it has that continuation, has that follow through to make another higher low, and then have that next move up to the orange zone. Okay, so this is a potential path if we do have a lot more bullishness coming into the markets, if for whatever reason they don't raise the rates, or they really insinuate no more raising rates going forward. And if we hit the downside, then look towards these levels down here, coming towards the sell side liquidity on the daily right here, and then also this bullish fair value gap here. So anywhere back down towards like 11,000 to maybe like 11.5. Okay, so we have both the levels we're looking at. It looks pretty clear to me. Obviously, the probabilities right now are that we are looking for upside. That is the probabilities right now, that we are looking for more upside. But again, the picture will change quite drastically as the Fed gets closer, the FOMC gets closer. All right, next is oil. So let's take a quick look at oil. So oil had that breakdown from the triangle structure, from the squeezing structure. And what did it do? It immediately came into these fair value gaps, so this fair value gap here, and wicked right out. So again, we just saw a sign of a potential bottoming candle here. A bottoming structure has been forming. Now, what this means doesn't mean that we're just going to go straight up from now. Okay, it could. Okay, so this is a bottoming tail. So on the daily, coming into a major zone, when you get this sort of candle, these candles are extremely strong, and they have a very high probability to pretty much catch the bottom. Okay, so if this is the bottom, this low wick on this bottoming tail, this bottoming candle can't get taken out. Okay, so if this is going to validate as that, this has to hold. Oh, sorry about that. I think my mic went out. Okay, so pretty much we want to see this candle hold. Okay, so if this candle does hold, then we're likely going to see move all the way back up towards the 70, 75, 70, and then potentially even higher. Okay, so we're going to watch and see this very closely, but we are in the zone. Okay, even though we didn't hit 60, this is the zone. Really, anywhere from 85 to 60 is the bottoming zone to me. So when you look at the monthly structure, the weekly structure, we're in it. Okay, so this is the zone where I'm looking for potential macro higher low being formed after its massive rally over the last couple of years. Okay, so anywhere where it's trading now, if it shows any major bottoming signs, you have to take it extremely seriously with oil, because I do find oil to be extremely bullish when you look at it from the monthly and weekly time frames. So this bottoming tail could be a huge candle to really highlight this might be the bottom here. All right, next is gold and silver. So gold finally showing weakness. So we had this massive rally up coming into the 2000s. It actually did tap into 2000, and this is what I did mention a couple recaps, over and over, like, hey, 2000 is going to be a major level. It's very unlikely to just get right on through and start trading through it, and that's exactly what happened. Got into there in denial. Okay, and it's going to take a lot for oil to actually break through here and sustain. Okay, and sustain. So for that to happen, I do think a lot of fundamental things are going to have to change, geopolitical stuff, and unfortunately a lot of bad things will probably have to happen for gold to start trading through 2000, blasting through 2000, and sustaining above there. So this is going to be a big ceiling for it, and I do think we're going to see some significant downside now. Okay, so I am looking for some significant downside. Again, I'm mid to long term bullish on gold. I still think that it will get past the 2000s. I think it's going to go past the highs it made over here. So past 2075. I think this is destined to get towards the 21s to 22s, potentially even 24. But that doesn't mean that it's going to happen now. I do see now, if this does play out, again, a lot of things can change on Wednesday. But if we're just looking at the charts right now, I'm seeing signs that this is going to break down back all the way sub 19, going into the 1800s again. So going into like 1890, and then potentially even taking this level out and going towards like 1870, and potentially even lower towards 1850. Okay, so it's still bullish, but we could be looking at a much deeper retracement again after this historic move up. Okay, and now you could add this massive impulsive move up. All right, so if we're going to have some continuation to the downside from this bearish candle we just closed, look for sub 1900 in my opinion. Okay, all right, next is silver. So silver, again, another topping candle coming right into that fair value gap I had mentioned. Watch for this bearish fair value gap. We get this bearish doji, and now we're likely going to see that downside. Okay, impulsive move into a major zone of supply and then you just get that bear doji, and now look for continuation. Now again, it's all probabilities. We could see this go much higher, but it's more likely to have a breakdown, and we're looking for a breakdown under this small low consolidation, so going back towards 21.4 and then potentially even lower, going towards like 20.8, 20.78. So I think there's plenty of downside on both gold and silver, even though I am bullish, and I do think that's a good shot that silver, if gold has an extended move down, could break this ascending trend line and get down towards the sub 20 again, going towards like 19.8 to 19.6. Okay, so we'll keep our eye on this stuff. We'll see how these play out, but overall, unless Wednesday changes things, this looks absolutely fabulous for downside in the short term. All right, now let's get into Bitcoin and see what's going on with Bitcoin here. What a day. What a couple of days in crypto. So let's see what's happening in Bitcoin today. So Bitcoin came to 28,000, and similar to gold, similar to a lot of these assets that are coming to major zones, it's slowing down. And I do think this has a good shot. Again, we don't know for sure, but this has a good shot of this being the I would say the short-term top potentially. Okay, it's still a little early. We don't really know for sure. We want to give this some time, but we are finally seeing signs of slowing down at this major level. So I would not be surprised that we get this bear doji to close in about 6 minutes, and then we'll look to see for continuation. Potentially, ideally, if you're looking for downside, you want this to close a doji kind of like this, or even a little tighter, and then have a bearish engulfing candle to follow the next daily candle, which is definitely possible. So we may get that bear engulfing candle kind of form here if we get this structure, and this looks prime for that impulsive structure with very little consolidation coming into major resistance, a major liquidity zone. So I would look for downside to break back towards sub 24,000, going towards the 23.8s, and potentially even lower, going down towards 22.5, 22.4. Okay, once we get there, I'll have to watch the price action and see, are we going to make a higher low structure over here, or are we going to be making a pretty much a continuation structure to break down, right? Because this level here, so this level here, it's going to take quite a bit of work for Bitcoin to take this out if we're going to go lower. Okay, so I don't know if we are, but if we are, you're going to see something like this where you break down and then you pretty much start consolidating here and have a rising structure kind of like this over a couple of days to maybe even a couple of weeks. And if you get something like this building in this general zone, it's by design to break under the liquidity zones here, under the daily sell side and this daily sell side liquidity, to pretty much come back into here and challenge these levels. So coming back into the sub 20,000s, the 19s. Now we don't know if that's happening here. Again, a lot of things can fundamentally change on Wednesday, but looking at the chart, if we get this bearish candle structure, which is bullish candle, bear doji, and then we get a bearish engulfing, this is the most likely path forward. Okay, and it would make sense considering how little we've consolidated. If you really take a look and look at this objectively, this consolidation, very little failure after taking out these highs here and then break down. Same thing, very little, even less consolidation than here. Take out these highs here and then we break down and fail. Okay, so this would make a lot of sense if that's what's happening. Now, let's say that's not what's happening, and we're just going through a fundamental shift. Maybe something huge is going to come out and people bought down here. If so, then I'm looking for the 30s. 28 to 38,000 has always been my general zone to watch for Bitcoin. If this is a bear market rally, this is the most likely place for Bitcoin to show real signs over the monthly and weekly time frames, and then the daily, of course, to pretty much slow down. Okay, so we don't know if this is a bear market rally. We don't know if this was the bottom down here. Okay, we don't know. Right now, the probabilities are on the side that we are still in a bear market rally. We don't really have a lot of evidence to tell us that the bear market's done, but we will be positioned to benefit as much as we can in the lemon garden if that is the case. Okay, so we're just going to have to follow the charts, continue to follow the price action, and that should keep us on the right side most of the time where we can benefit from the markets. Okay, so overall, everything's been going pretty well. I think we're well positioned in some of the shorts. We still have a couple of longs open, but overall I like our positioning, and we're not so exposed in the lemon garden where we can't be nimble. And that's why I'm always preaching it. You got to be nimble. That way, when you're wrong, because we're definitely going to be wrong at some point, you don't immediately just lose. You have the opportunity to correct your mistake and maybe adapt and find yourself in a better position you never would have thought of in the first place. So that's why, in my opinion, it's so good to have your risk under control, but also have your position sizing under control. That is by far the most important part of risk management, in my opinion. All right, guys, so that is it. That is it with the recap. Hopefully you found some value in this. Of course, if you disagree with me or you have a question or anything like that, make sure to leave a comment in the in the comment section, and I'll get to it. And also, if you haven't joined the Discord, join the Discord. It's a free Discord. I also give out free trades. Again, not financial advice, just stuff I'm sharing that I'm going to be doing. And if you want to follow it, that's of your own choice. And I wish you luck. But I do post a lot of free stuff, and I also have a bunch of services: tutoring service, swing trade service, day trading room. And we actually recently just got someone funded for via FTMO. So if you want to become a funded trader, take a look at the day trading room, see that service, see if it maybe jives with what you're looking for, and maybe it's something you're interested in. And yeah, that's about it. So guys, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.